TCI Express continued to deliver robust quarterly performance in Q3 FY20. Let's do a three-point analysis of the earnings fine print and also the outlook on the company. 1. Q3 result highlights. Well, TCI Express quarterly revenues rose by just about 2% year-on-year to 268 crore rupees. Now, the sluggish economic activity and the unrest in northeastern states had an adverse impact on Q3 sales. However, the company reported a volume growth of 1% owing to new client additions in the SME segment this time around. Now, realizations growth was also muted at 1%. Operating efficiencies resulting from better capacity utilizations and also change in the axle load norms aided the expansion in margins in Q3. EBITDA for the quarter also came in at 34 crores, up 11% year-on-year. Now, profit after tax also jumped 36% on account of the reduction in interest payments and also the lower tax outgo. 2. What's the outlook going forward then? Well, TCI Express's revenues growth also has been tapering in the recent quarters, owing to a subdued external environment and also a weak demand footprint as well. However, the volumes are inching up. This is despite the slowdown and also the economies of scale and integration of technology, which is supporting the cost structure and also driving the improvement in margins from there on. Overall, the demand environment has been quite challenging throughout the FY20, and also the management has lowered its revenue growth guidance to 8% from 13 to 14% earlier for this fiscal year, which actually appears very optimistic considering the slowdown across the multiple sectors that we are seeing. Now, government initiatives towards the development of logistics parks and also the construction of roads is also benefiting the express logistics market. Now, besides the demand, it is also rising due to the corporate focus on the supply chain efficiencies. Now, the medium-term outlook for TCI Express appears promising as the demand for the express cargo is anticipated to grow much faster than the industry. However, the near-term growth appears unlikely as the outbreak of the coronavirus in China is going to hamper the volumes over the next 1 to 2 quarters. Now, the company also could be facing some pricing pressures due to the existing spare capacity in the sector. 3. What should investors do then? Well, TCI Express, with its solid business fundamentals and also high return ratios and the proven track record of execution, is among the preferred picks in the sector. However, the current risk-reward proposition for the investors appears quite unfavorable at the moment, considering the lofty valuations, which is near 38 times FY20 estimated earnings. Now, we at Moneycontrol Research believe that this is an opportune time for the investors to take profits on the current positions. Also, prospective investors may want to wait for a correction before initiating any kind of fresh longs.